Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Today, I'm just going to give an update of what is going on at the IRS. Okay, like what? It's just a lot of stuff, and there was like no way to do broadcast on this topic or that topic. It's just a lot of little stuff together that you need to know. Okay, so it's January 28th. It is the IRS is open for receiving e-file returns for everybody, individuals and corporate returns. But you also know that this is on the heels of the end of the government shutdown. So I read an article in Forbes this morning that said that the IRS is behind on like 5 million letters. Okay. So IRS corresponds through the U.S. mail. They got 5 million of those babies that are stacked up waiting for them. Okay. They are also behind on hiring people for the tax season. They're behind on training. They're behind on training people on how to apply the new tax code. Now, that part I don't quite get because, they only had a whole year to work on that part, but whatever, it is what it is. But this is what happens when, tax reform was done in a microwave, really, compared to the last tax reform. The last tax reform we had in 86. It took them a couple of years to work through it all and then implement it. This was done in a microwave, and they were still messing some stuff up. Okay. So they're still behind on hiring. They're still behind on training. And so and they just released the final guidance on the Section 199A last Friday. And so that brings me to my next point. So if you filed a Schedule C return before, let's say, the 25th, then your Section 199A deduction was probably not figured correctly because the IRS had just issued their guidance last Friday, and the programmers had to go then and change the program to fit what the IRS guidance was. So if you filed your Schedule C or your S Corp or partnership return already, 9 times out of 10, your Section 199A deduction is wrong. Okay, it is what it is. So that means, and that brings me to my next point, which is why I was telling people, get some audit insurance this time around. Even if you don't normally get audit insurance, get you some audit insurance this time, because it's going to be some crazy stuff going on when these returns finally get audited. So the one thing that was not really made known for people that claim the Section 199A deduction, which is a qualified business income deduction, if you claim that deduction, your substantial underpayment threshold has been cut in half. So now if you have more than a 5% understatement of tax due, then you have the substantial underpayment penalty, where it's normally at 10%. And so what does that 5% look like? Well, if you have $1,000 tax liability and it's off by $50 or more, you have a substantial underpayment penalty. That brings that home, right? That 5% that's tiny. Okay, 10% was already bad enough, but 5% if you claim the Section 199A deduction. Now, if you have already filed your taxes and you had a Schedule C, a partnership, or an S Corp return, you need to go back and check that return to make sure that your Section 199A deduction is calculated properly, because if you're off by $50 per $1,000, then you're going to get the substantial underpayment penalty. Okay. Now, the other thing that was in the headlines is that the IRS was waiving under-withholding penalties. So with this tax reform, with the whole tax cuts and everything, normally what happens is everybody's got to go through and fill out their W-4s again and get them to HR, and HR makes the adjustments. But this time they just like, oh, we're just going to do that for you. Well, the problem is that because, and if you didn't check your stuff out, you probably don't even know. Okay. So instead of you doing it, the IRS said, okay, we're going to do it for you. But the problem is that some people's incomes, even though that bracket may have gotten a tax cut, you were bumped up into a higher tax bracket. So you may not have had enough taxes withheld and you don't even know it. And so what the IRS has done is said, okay, well, normally you get an under withholding penalty if you have less than 90% of your current tax year withheld, okay, under 90%. And so what the IRS said is, okay, we're waiving the penalty. Nah. What they did is reduced it to 85%. Okay, so they didn't waive the penalty altogether. They just said, okay, instead of having an under withholding penalty at 90%, we're going to say, okay, if you have less than 85% of your taxes withheld, 5 whole percent. Again, $50 of every 1,000. That's 5%. Okay, so there may be some people who still have under withholding penalties. And oh, by the way, this does not apply to people who married filing jointly make more than $150,000 or filing separately $75,000. There is no penalty waiver for those taxpayers. So there's a lot of stuff that is going on. So along with having a new tax code that, people are going to have to really be patient. Tax professionals, listen, if you don't know the math behind the 199A deduction, I'm going to need for you to go get some training, like seriously, because you need to know if your software is actually doing it correctly. My software wasn't figuring it properly until Saturday. So there are some people who are out there whose returns have already been filed and they didn't have the proper deduction. And that can really throw you off and throw you into a penalty. Okay, so you got to know the math. You have to be able to look and see, was this figured properly for your taxpayers? There may be some people that have to file amendments if those taxes are already filed, so that you can properly figure that deduction. And it might be that your refund isn't as big as it, originally was, or you might have to send some more money. That's how that's going to look. So you definitely want to do that. So that is, so that's the scoop on that. I have a question. If you are a W-4 employee, but the company you work for will allow you to work from home, do you get the same tax exemptions as a home business owner? The answer is no, you do not. That is one of the things that went away with the Tax Cuts and Jobs Act. People who are W-2, who receive a W-2 at the end of the year, if you are an employee and you work from home, you can no longer claim the home business tax deductions. That is completely gone. I have a lot of salespeople who are really basically having a stroke because they get paid on a W-2, but they put in a lot of miles. They purchase leads and all these things. But when you're a W-2 employee starting January 1, 2018, those deductions that you normally have are gone. And there are very, very few exceptions. For the most part, and for the people in my audience, it doesn't work. For statutory employees, you may still have that. And you will know if you are a statutory employee. Okay? So, yeah. So that's the scoop, guys. So, again, put your patience on. Be patient with your tax professional, because they're going to have to go back and do some extra checking to make sure your stuff is right. Be patient with tax refunds, because your tax professional does not have your tax refund. If you want to know where your tax refund is, you go to irs.gov and click on where's my refund, and you have to have the proper information, your social security number, your filing status, and the exact amount of your refund. Don't harass your tax professional. We don't have your money. Okay. And the other thing is that the IRS, if they take longer than their allotted amount of time to issue your refund, you will get interest on that refund, but you will also get an interest statement from the IRS, and that's taxable as well. Even though it might be a few dollars, you still got to report it. Okay. So that's what's going on with the IRS, you guys. That's it. I have another question. It says, does the same apply for Schedule C businesses but still have a W-2? Okay. If you have a business from home, you can claim your expenses. Okay. And that means if you have a business from home and you have a job, you can still claim your expenses. But if your job pays you to work from home, to telework, you can no longer claim those home office deductions, mileage deductions. All of those things are gone. Okay. So one of the things that you have to look at is to go back to your employer to say, hey, can you reimburse us on what's called an accountable plan? But with that, though, they may reimburse you, but it's going to be taxable income. It's still better than nothing, but just know it's going to be taxable if they reimburse you. So it's better than being out of pocket, but just know there's going to be taxes owed on that money. So it'll be, taken out when they pay you, but I'm just saying, just so you know. Okay. I think that's it now. All right. So let's go. We are off to the races. It is tax season, baby. All right. So you guys have a really great day. Be patient this tax season. I wish all of my tax professionals a prosperous season, and all of my taxpayers, I hope y'all get y'all money. Okay. But for people that, don't play and act like you don't know. April 15th is the deadline to write your check. I don't care if the government is open or closed. You still got to write your check. All right. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.